In my previous video, I analyzed that one of the best ways to make money is to invest in stocks. Well, in March, I spent 1 week researching the stock market and I gave it a shot. 6 months later, I have 60% returns. And this video explains how. So let's go.
By the way, I'm not a financial advisor, but the results I always show are real and everything has happened. Here is just a quick look at the portfolio that I track with Yahoo Finance app. Now it is at $40,900. Here you can see a total gain, and under that are my portfolios divided into 3 categories: spec stocks, dividend stocks, and long-term companies which I hold. In this column you can see the total gain on each portfolio. And now let's get to the principles.
There are only 2 reasons why you should invest part of your savings in less than a week. There's a market dip or there is a single stock sell-off. And this is exactly what I did with my $30,000, which is all of my savings, and I invested it in less than a week. I saw this dip and it was clear to me that the economy will recover. What you want to do if you see an opportunity like that is to create an account and move your assets there, whether it's E-Trade or Robinhood or TD Ameritrade. Just don't do anything with that yet. You should just make sure that you are ready to invest whenever you see the opportunity. This, for example, cost me about 5 to 10% gains just because of these administrative delays. Just remember, if the market crash hits, there are going to be companies and businesses that will have a slower recovery. As an example, all of my stocks which I own right now are already in profit. However, in February 2020, I bought 1 stock which I bought and sold with a loss. It is Delta Airlines, ticker symbol DAL. I thought that Warren Buffett knew what he's doing when he bought airlines when the stock surged. And later that time,
the world has changed for the airlines, and I don't know how it's changed, and I hope it corrects itself.
He sold all of his positions, and so did I with the 5% loss. I sold with the loss so my attention could move from this uncertain industry. So you want to learn investing in stocks in 1 week? Well, then I recommend you to take a holiday, because it's going to be a hell of a week. You have to be very selective about what you do and what you don't do. For example, I'm not a big reader, and the only way I'm able to read few books in 1 week is to listen to audiobooks. It allows me to listen when I travel, it allows me to listen when I walk my dog, and it is super effective. I would recommend you to read these 2 books that I've read, and the first one is The Common Sense of Investing. It has just 5 hours of audiobook, so that's pretty easy to consume that. The second book is An Intelligent Investor. It has 17 hours of audiobook, but I did skip some content because I had only 1 week. I would also recommend to buy some full course that teaches how to invest in stocks. I don't sell any type of courses, so I think you will pay something about $20 and it will take you about 10 hours of your time. On day 3, you are going to be setting up your targets. What type of return I can expect from investing in the stock market? Well, if you expect 100% gains, that is not investing in the stock market and it has nothing to do with that. That is just pure trading. And these type of gains are mostly unsustainable in the long run. The most successful investors, like Warren Buffett, will have annual returns of 20%. Individual investors like you and like me will have annual returns of 3.5% on the stock market. Mutual funds have annual returns of about 6.5%. If 3.5% doesn't sound exciting, listen to this. Don't trust to people who will tell you that you can invest any type of money in the stock market. This is ridiculous advice. Imagine that you are the Oracle of Omaha. You are the Warren Buffett and you invested $1,000. You have exceptional year and you have 20% returns on your stock. Everyone envies you this, and after a year of watching over the stock market, all these researches and also sleepless nights, you have $200 returns at the end of the year. All I want to say is respect your time. If you have less than $20,000 to invest, maybe you should spend your time earning this money, which you can later on invest in the stock market. That's all I'm trying to say here. What would be the reasonable target? For me personally, my target, which I think it will be worth of my time with this type of money which I'm invested in, is somewhere between 15 to 20%. As a beginner, your expectations doesn't need to be that high. It could be somewhere between 3.5 to 10%, and that would be actually very good results, and you should be happy with that. First, let's talk about stocks, which I'm trying to avoid, and these are the stocks with unsure future. If you are buying in a dip, make sure that you are not buying stocks that will be affected years in the future. This is a mistake I made with the Delta Airlines. Second, as a beginner, you want to stay away from volatile stocks that are under $1 billion market capitalization. These stocks could go plus or minus 10% in a day. The inexperienced investor will involve emotion and could do something silly. If you invest, you want to hold the stocks for 10 years in the future. The third thing you want to avoid is to join the party too late. If you're buying a hype stock, the last thing that you want to do is to buy it at its peak. I've seen this many times with my Tesla stock, and I'm glad that I bought it cheap. There is a usually decline when the market realized, whoa, okay, this was a crazy ride. As a beginner, this is the worst spot to be at its peak. So buy the stocks when they dip.
Here's my process before buying a value stock.
First, and the most important, is the product. I don't just take a look at their pictures like many people would do with Nikola stock. I would go on their website and find out how they sell it. How much is the product? Most of the time, I would invest in an existing product. Think about the user experience and marketing. Also, check the Google reviews. All of that matters. Know what you own. I have to understand the business model and how they make money and what the margins are. For example, I never invest in banks because financial institutions are hard to understand. Let's be honest, sometimes they don't even understand themselves. When Fed starts to print money, who knows what will happen? So find your field. Third step in the process is the absolute least favorite of all the beginners, and that is to read the balance sheets. It is a chapter by itself, and you should and you have to learn the skill to read them. Value investors use almost only balance sheets to evaluate companies, and to you it will help you to evaluate the price point which you want to buy or sell the stock for. The next step is probably the most overlooked from the beginners, and that is experience management. I want to sleep well and I want to take holidays without stress. And that's exactly what experience management will do for you. They will make sure that if there is a problem in the company that you bought, that they will handle that. I mean, obviously there are more things, but these are my most important steps when I'm buying a stock. Also keep in mind that you should diversify your portfolio. More stocks means more diversification, but the more stocks you own, the harder it is to keep track of them. Don't take my word for it, take his.
If you know how to analyze businesses and value businesses, it's crazy to own 50 stocks or 40 stocks or 30 stocks probably, because there aren't that many wonderful businesses.
Again, one of my early mistakes was that I bought too many stocks. The more I bought, the less I knew about the business. Let's get to the last day of the week. It is time, and you are ready to buy the stocks. And still, this is where you can make the most crucial mistake. It is very easy to get excited about stock. Before buying, ask yourself the last question. Do you want to own this business for the next 10 years? If the answer is no, you're buying because someone told you, not because you know the business. For example, I bought Coca-Cola for the same exact reason and I sold it a few months later. Next thing, it is improbable that you will buy at the lowest point of the dip. Some of the stocks may drop even lower, 5 or 10%. Here I want to show you footage I found on my phone. This is how my $10,000 portfolio looked like after first week. It is all in red. So please take my advice when I say to keep some money to add to your positions later. By the way, I did add another 15K 2 weeks later. My total investment is $25,000 and after 6 months it grew to $40,000. After you buy shares in a company, then forget the stock price. Rather keep track of a business. Read the quarterly financial reports and the news. Don't be surprised if you will find some crucial information about the business that you own. Then think if that fundamentally changed your point of view of that business. If yes, sell the stock. If not, keep it. That's it. Just to be clear, I don't recommend you to buy stocks in 7 days, but there are many people out there who are buying even in a shorter period of time. Sometimes when there is an opportunity, you have to take advantage, and this video is about how to do it as mindfully as possible. Next time I will reveal my portfolio. I hope you guys liked it. That's it for me today, and see you guys next time. By the way, it would mean a world to me if you would subscribe, so please do it, and see you guys next time.